Morning, good afternoon, good evening from wherever you are watching this video from. So today I just wanted to look at a few ways or a few things that one is supposed to consider or what one is supposed to look at before placing any trade on the forex market. So I'll just try to make it quick, a few minutes, and then we see how it goes. So number one of the things that a forex trader is supposed to consider before putting any trade is market structure. So I'll call it market structure. But this is number one. So when you talk about market structure, what does it mean? So normally the way price moves on in the forex market is the price does not move like in one way. You know, price moves in a zigzag motion. It goes up, it goes down, it goes up. At times it's constant on one level like that. And if I can demonstrate it even from these charts that are in front of me, you find that how price is moving is price has moved from this point to that point, come back, moved back, consolidated, and goes back. So now your number one item that you're supposed to look at before pricing a trade is what is the market structure? And by market structure, I mean at what level is price at? You know, is price at a descending stage? Is price at let's say I use that. So is price at a consolidation state like this? This is consolidation. Like when I say consolidation, I mean like price is moving almost on a horizontal level. You cannot tell whether the bears or the bulls have the market. So that's one thing that you have to consider. Or is the market price at an as ascending stage? So like this is an ascending market. Like you see clearly that the bulls have the market in this instance. So before you place any trade, that is one of the things that a forex trader should consider. So I'll just put here. So number one is market structure. So is the market descending? Uh, is the market descending? Is the market ascending? Or is the market ranging? So that is number one item that you're supposed to consider. Number two, another thing that you're supposed to consider is what is the area of value in the market. So number two will be area of value. And when I speak about area of value in the market, it means there are a few things that you're going to look at. You're going to look at areas of value which will include things like equal tops. I'll put here equal tops there. I'll also put things, I'll also include support and resistance level. So these are the areas of value in the market. Support and resistance level. I can also use, I love using 20 and 50 EMS just to try and tell what is the area of value in this market. So for example, if I'm looking at this as an area, this area the market has respected this area a few instances. Like here, it has respected that area. Price has also respected that area. Price has respected that area. And price has respected that area. So it just generally means that in future, if price continues going further, anytime price reaches this level, which has been previously used as a support level, then it's very easy for an experienced trader to always identify such crucial levels. The same can be looked at levels that have been used as resistance. So sorry, this was support and This is resistance level. So around this region, you find that price always hits this region and comes and draws back. The same it did here. If I can include that here, price reached that level and went back downwards. If I move back all the way up to here, you can still see that there are specific things. Price reached here and continued going upwards. Price reached here and price continued going up, or it reached here. If I can just extend, if I can extend this all the way to the left, it reached here and used the same level as the resistance level. So this is the area of value. There are some people who will wait for price to reach this area of value to go into a buy, or you wait for price to reach this area of value to go into a sell. So that is one of the things to consider when you talk about areas of value. There are those who use what we call smart money strategy, and for them, the areas that they look for these equal tops or equal bottoms. So this is equal tops, which basically means that these are areas where traders left their stop losses when the market was going downwards. The same way, I'm just trying to look at area of equal tops or equal bottom. This is another area that has been used as an area of equal bottom. So what that basically means is when the market was moving upwards, traders left stop losses here. This is where their orders remained, you know. So what does the market do? When the market comes back, you see this area, if I extend it, the market comes back and clears all the stop orders or all the stop losses that are left here as it goes downwards. So to those who use this smart money strategy, this will be their area of value. Then, if I was just to clear this and make the charts a little bit tidy, there are people who will use the EMAs, which are the moving averages. So on my chart, let me just restate. On my chart, let me just begin from, let's say here. On my chart, we will see that we have 3 EMAs. On my chart, we have 3 EMAs. Why it's not activating? Settings. Wait. So I'll just try to. So we have 3 EMS. So we have the blue one, which is the slow moving average, the blue one, which this is the 200 EMA. So this is the 200 EMA. The red one is the 50 EMA. I'll include that. Red is 50. And no, the black one is the 200. The red is 50, and the blue one, which is the fast moving average, which is the fast moving average, is 20. I hope I'm doing the right thing. No, sorry, it's the other way around. It's me confusing myself. So that is the 20, this is the 50, and the black one is the 20 EMA. So there's some people who will consider this as areas of value. So for example, what happens is this person will hold this trade as soon as the black, which is the 20 EMA, crosses the 50 EMA, they will enter into a trade. So here they will enter into a buy, and they will stay in this buy as long as the 20 EMA is above the 50 EMA, which is red in color. So when the 20 EMA crosses the 50 EMA, they get out of the trade and enter into a sell. And if someone entered into a sell at this point, this person will still be holding the trade up to here because the black EMA has not crossed over the 50 EMA. So that is another consideration that someone will look at before placing a trade. You look at the areas of value. So to sum up, we have said areas of value include support and resistance levels, And then we have also talked about moving average and equal tops and bottoms. So we move to item number 3. So item number 3, which I've kind of slightly explained, is what is the entry level? At what place are you entering this market? What is the entry level? What is the entry level in before putting a trade? As I have already highlighted before, that there's some people who are using, let's say, moving averages. They will use this place as an entry level where the 20 EMA, which is the fast moving average, crosses the 50 EMA. If you're using support and resistance, I think we still have support and resistance somewhere. We deleted it. So if you're using support and resistance, I'll try to just highlight a quick one here. If you're using support and resistance level, then this person will be looking at this here, this level, because this area has been used before as a support level. If you move back, it has still been used as a support level. So this person will be waiting for price to reach this particular place to see how is he going to what step is the person going to take in the market. But having known that this place has been retested a few times by the bulls, then the right thing to do is next time price reaches here, then you definitely will take a buy, a sell, because the more the area is tested by the market so many times, the weaker it becomes. Because here, first of all, the bulls tried to test it. No, they were brought back. They came back the second time, pushed price up, still came back, went up, still came back. So if you're trying to highlight that area, you find that this area has been tested a few times. This area has been tested a few times. And as a trader, this can guide you as your entry level. Or if you have entered into a buy, you definitely know that once a price reaches back to this level that has been tested before, then it is your time to exit the market. There are some people who will also look at different things. For example, break of structure. So when I talk of a break of structure, I'll try to use my example of equal tops and equal bottoms. So let's say equal tops, equal bottoms. So here, if you're trying to use entry level, then you are looking at anyone who is looking for a buy option. He will wait until the market breaks this structure, because this is an area whereby you have equal tops. So the person will wait until when the market comes back, breaks the structure, and he can start looking for buy opportunities. That is one example. Another example, if I just try to push this price backwards, you will find that this trend line, if someone was trading using the trend line, let me just try to mark it correctly. Yeah, like that. What that means is you will wait until price breaks this structure, which is the trend line. So one person will have waited, because this is how the market behaves. When price reaches that trend line, it bounces back. Reaches the trend line, it bounces back. Reaches the trend line, it bounces back. So this can be used in future to know when to get into sell opportunities or when to enter into a sell, because you definitely know based on history, because we always say that the trend line is a forex trader's best friend, that each time price hits here, most definitely, most of the time is price will come back, and if it doesn't, then we'll know that that is what we call a false breakout. And I'm just going to show you how it happened in this trend line, that price reached this level. Instead of going back as anticipated or as it has done before, price went up, came back a little bit, and a few traders got into the market thinking that price was going back for a sell. But then what did price action do? It went all the way up to around 20,000, 23,680 level. So this is what we call a false breakout. False breakout. That price behaves as if it's going in a particular way, then it reverses. So these are one of the things that any forex trader should consider. Any forex trader should consider before putting a trade. And the last one that I think a trader should consider, number 4. So on number 3 we said entry level, and on entry level we have break of structure, break of structure, and false breakout, false breakout, breakout. And number 4, which is the last one, is a place where you're going to put your stop loss. Remember, traders, that when you're trading, always have a stop loss, because that is part of risk management. So where are you going to put your stop loss? If this market, once again, I'll just clear this to make it easy to be read. So if you are going to get into a sell, let's say if you enter the sell here all the way up to here, where are you going to put your stop loss? Definitely there are a few people who will put their stop loss maybe 20 pips before price, or there are some who will use the last higher candle. So in this case, the last high candle is here, which is around this level. So it depends with your strategy, it depends with your risk management, and it depends with where you want to put your stop loss. There are a few people, like I've mentioned. I'll go back to my 50 EMA indicator, 50 and 200. There's some people, let's say they entered into this market, they will use the 50 EMA as their place to put the stop loss. So what does that mean? It means that at any particular time, should price hit the 50 EMA, which is red in color, you leave the market. Just to demonstrate this, let me try to use an area that is well highlighted. So for example, if someone entered the market here at this point, it means this person stayed in the market as long as, let me change this color, the color of the 20 EMA to a bright one. Let me use yellow. Okay, that makes sense. So just use a line to make it visible, then the dots. Yeah. So if somebody got into the market, let's set this and just go back to our level. So if a trader get into the market at this level, when the first moving average, which is yellow, crossed the red moving average, he stayed in the market until when the price went or crossed the 50 EMA. So in this level, when price crossed the 50 EMA, the person will get out of the market and wait again until price of the moving until the fast moving average crosses the slow moving average, which is the 50 EMA. At this point here, so got into the market and waited again up to this level when the fast moving average crosses the slow moving average, and got out of the market. Yeah. So this is this is another way that traders use, because this one is just using this as a stop loss. So his stop loss is the 50 or the slow moving EMA. We have also spoken about the people who put their stop losses just way a few pips from their entry level. So if he entered from here, maybe he'll try to put maybe 25 pips here, or there are some people who would put the price at the immediate low level, which will be here. So they'll put their stop loss here just to protect themselves, that should price revert, they will be protected because it's a few pips away. There are other people who use other indicators like the ATR. ATR just means average trading range. So they will put one ATR or two ATR below price. So I think that does it for me today. I just wanted to do a very quick one on what to consider before placing a trade. And we have said there are four things. Number one is the market structure. Is the market descending? Is it ascending? Is it ranging? Number two, what is the area of value on the market or in the chart? The traders who look for support and resistance levels, the traders who use the moving average, others who use the smart money trading technique will look at equal tops and equal bottoms, or will look at where is the liquidity. Number three, we have to consider what is the entry level. Is it at the when price breaks structure? Is it during false breakout? Or if you're using moving average, is your entry level where the first moving average crosses the slow moving average? And number four, and the most important one, which is a stop loss. Where are you going to put your stop loss? So I think that's it for me, guys. And please like my video and share my video. Ask the questions in the comment sections, and I'll always answer the question. Thank you, and goodbye.